Share of workers rating their retirement savings remains at an all-time high as they grapple with the lack of emergency funds. We have Yahoo Finance's Kerry Hannon here with the details on that. Kerry, what are we seeing?
Yeah, I mean, this is a gigantic problem that we're seeing as workers are dipping into these retirement accounts and they're just withdrawing the money. We've seen this. The most recent study was Transamerica that we're looking at this week that found that, a large percentage of workers have dipped into them, mostly younger workers more than older workers. But we've seen this same trend through Vanguard's recent report. Bank of America has shown this. This is definitely a trend that's happening, and people are dipping into these accounts and they're withdrawing the money, and they're willing to pay the tax on that money as well as a possible penalty. But what has happened is what we're seeing is this report from Transamerica really is showing that people need the money now. They are saying that they're having trouble making ends meet, that they simply don't have the income to continue to save for retirement. And they have these big medical bills. It's not like they're using this money frivolously. These are hardship withdrawals. They're looking to pay medical bills, preventing an eviction from a home or other home costs, these sorts of very serious issues that people are confronting. But I've got to tell you that this kind of drainage on retirement accounts is going to be something that people really feel in retirement. And it's concerning. I mean, there's just pervasive pessimism out there when Transamerica looked at the workers in general who are withdrawing this money and the others. It's inflation that's causing this problem. It's, what we've been going through, the strained budgets. But people, you ask them and they say in this study, they said most of them feel like, a large percentage, 4 in 10, say they're going to be worse off in retirement than people who are currently retired. Their number one fear is they're going to outlive their savings. And if they're dipping into it, I can assure you this could be a possibility for them. And so this is something that we're grappling with. And both policymakers and financial planners have got to take control of this because this is going to be a very bad situation. It's a very fragile situation. And when you look at retirement security, if people are opening the gates, and one reason this has happened is because during COVID, it became a lot easier to access this money. You could get to your retirement accounts to make a COVID-related withdrawal without paying that 10% penalty. And people have gotten used to this idea, and new things coming up next year with Secure 2.0, a law that went through last year, is trying to encourage people to save in retirement. But by doing so, they gave some new ways, new exceptions for people to be able to get their money back out easily. So will this compound the problem? It may very well. We may see more of this in the future.
Kerry, that raises the question about how people should be thinking about their emergency funds. How much should they be setting aside?
Yeah, this is a great question. And Kiko, what's happening is people have very small amounts of money set aside for in their emergency savings funds. In the Transamerica report, they found that, say, Gen Z has maybe $1,000 and millennials, maybe they have about, it looked like they had around, I think it looked like it was, they had around 5,000 set aside, but there's just not, or 3,500, 5,000 for Gen X. That's not a lot of money when you have a big medical bill, right? So what is happening is we're trying to find ways to encourage people to set money aside in these rainy day funds, right? One way that we might see some positive movement here is next year, because of Secure 2.0, there is a provision that will allow employers through the retirement account setup to automatically start these emergency saving accounts for their employees. It's a small amount, maybe 3% of their income, and you can opt out. You don't have to do this. But because of the auto enrollment in an emergency savings plan, now this is money that is after tax, but the good news is, it's this inertia. It's out of sight, out of mind. If you start automatically saving, trust me, this is a great way to get people started on that path.
Yeah, you got a lot of viewers thinking now about that potential for emergency funds. Kerry Hannon, thanks so much.